Welcome your excellencies and esteemed guests. Salaam alaikum. Ana Katie Ramsey wa ana min Britannia wa al-yum ana Saida jidam basabab ana fi Saudiya. Shukran lakum. Shukran. So I said for the English speakers like myself, welcome everybody. I'm Katie Ramsey from the United Kingdom, and today I'm very happy because I'm in Saudi. So thank you. So today's theme is ethics in fintech, and we're looking, as we're striking a balance between digital literacy and responsibility, this session will dive into the ethical implications of emerging financial technologies. It will explore how fintech companies can balance innovation with responsible practices to ensure trust and transparency in the digital age. And the discussion will also encompass the responsibilities of regulators and the financial services industry as a whole in fostering an ethical fintech ecosystem. So let me introduce everybody briefly before handing it over to our esteemed panelists themselves and to explain a little bit more about what they do. So we have Nicolas Beynud, Deputy Director, Directorate for Financial and Enterprise Affairs at the OECD. We have Lei-Ming Chen, Chief Sustainability Officer at Ant International, and Faraz Al-Salah, Director of FinTech Development at Saudi Central Bank, SAMA. So over to you, Nicolas, to talk a little bit more about what you do in the OECD.
Thank you, Katie, and good morning, everyone. It's really an honor and a pleasure to be here today and to be at this conference, which is beautifully organized. So the OECD is an international organization that is based in Paris, was created in 1960. It's focusing, so it has a membership of 38 countries, with 6 countries which are in the process of accession, including big Asian countries like Indonesia and Thailand. We are focusing on public policies. We are basically covering the entire spectrum of public policies, from macro, structural, employment, financial markets, health, and you name it. And we are basically advising our members on how to do, and this is our motto, better policies for better lives. And we are working, including on financial markets and regulation of fintech.
Thank you, Nicolas. And Lei-Ming?
Yes, thank you, Katie. Privileged to be part of this panel. My name is Lei-Ming Chen. I'm the Chief Sustainability Officer of Ant International. Ant International is the international arm of the Ant Group, which is a leading fintech company in the world. Throughout our journey, starting 2003, we have been really focused on solving the pain points of consumers and SMEs over the years. And in my capacity as a Chief Sustainability Officer, we really sort of look at how our business can sustainably grow with ESG strategy embedded as our business strategy. ESG, social responsibility, is a big part of it. Hence, I'm here to talk about technology ethics.
Sure. Thank you very much, Lei-Ming. And then over to Faris.
Thank you, Katie. And that was a great introduction in Arabic, so I can validate that. We're very happy to be here. I oversee the fintech development within the central bank. Multiple responsibilities assigned, starting from the regulatory sandbox, covering the fintech sector, as well as overseeing the fintech national strategy.
Shukran. Okay, so that's everybody. I'm sure you can all agree, an absolutely fantastic panel here. And so on to our first question. In today's digital age, which is rapidly evolving, how can we as ecosystem players balance innovation and accountability with ethical practices? So I think over to you, Faris.
Thank you, and this is a very important point. Perhaps we all listened to His Excellency, the Central Bank Governor, yesterday in his keynote speech, emphasizing the importance of the regulatory environment and building a trust and ensuring confidence in the financial system. I would like to start by building up on that. and asking why ethics are important within the fintech ecosystem. As we can see, fintech players are playing a very important role within the ecosystem while containing and handling a lot of sensitive financial data. Those financial data are better be trusted, better than secured at a start. Hence, a trust in that domain is accountability. So accountability contributes to the company's sustainable business and acquiring new clients. So I would like to really emphasize on that trust is a cornerstone of confidence and financial stability.
Sure, thank you very much. And Lieming, in terms of the private sector, what is your thoughts from that perspective?
Thank you. Yeah, no, I think Farish said the framework very well. And I think for a technology company like Ant International and Group, we understand the value of innovation, technological innovation, and in that process, we talk about the scale of our service offerings, our technology innovation bring to the table to serve vast base of consumers. We have 1.5 billion accounts that probably translate into more than 1 billion consumers.
Wow.
And we serve over 90 million merchants, most of them are SME merchants. So with the scale comes enormous responsibilities. And what we guide ourselves really is, the cornerstone of our business really is trust, right? We started with solving the trust issues when e-commerce just emerged in China and the financial infrastructure was very poor. Nobody had credit cards. And how are you going to transact online with people you have never met? So Alipay was established to solve that trust issue as an escrow account. And with that, over the years, we have been sort of looking at what are our responsibilities, what technology innovation means to our consumers and to our merchant. So we have been really guided by 4 principles. Okay. Trust, respect, trustworthiness, respect, responsibility, and also fairness. Sure. So with that 4 principles, we really guide that with our technology ethics. Sure. And last year we rolled out our AI first business strategy. And the cornerstone of that really, again, with technology ethics. So I think as a corporation, you need to constantly be aware of your responsibilities. Yeah. It's not just sort of get more business, because at the end of the day, if you lose trust, if you are not responsible for your corporate actions, you're not going to be sustainably developed.
Sure, thank you. And then Nicholas, when it comes to, obviously they're adopting that AI first approach from Ant Group and looking at respect, trust, what about sort of other ethical considerations from a micro and a macro perspective? Do you cover and look at and try to mitigate against OECD?
Well, first of all, I must say, when I'm listening to Lieming, it's music to our ears. Of course, yeah. It's really what also the OECD is promoting as a standard setter. Maybe to start with, I would like to say that innovation is not an end in itself.
Sure.
So innovation is there to generate efficiency gains, to reduce cost, to offer better services to customers. But if you take a step back and you look at society in general, and there was a good session yesterday on the social and global impact of fintech, there is also the promise of democratization of finance, of financial inclusion. And innovation is also there to achieve those objectives. And this is very much in light of that we at the OECD, we are looking at regulation. To what extent, indeed, the development of innovation, including in financial markets, including through fintech, can go some way to achieving this objective. So indeed, from that perspective, if you look at AI in particular, there are a number of issues which are quite well known. The first one is the potential for bias and discrimination,
sure.
Which we know based on gender, based on ethnicity, based on location. There are multiple factors that can be built in the data that are used to train those AI models. So the quality of data is absolutely essential. This is something that needs to be taken into account, and there are regulations in that domain that must be implemented. The second aspect, which also we are looking at, is the fact that the risk with AI-based models, including when it's used in finance, is the lack of explainability. So the fact that this model could be used as black boxes.
Yeah.
And this is problematic because then the decisions that are coming from those models, they cannot be justified. Yeah. They cannot just be justified by financial institutions. This is an ethical problem because if you don't grant a credit to a customer, if you cannot justify your investment strategy vis-à-vis retail investors, this is an ethical issue. And it has to do with accountability, transparency, and at the end of the day, with trust.
Sure. Thank you.
And maybe just one aspect is the environmental footprint of all those technologies. Just to give you an order of magnitude, we anticipate that in 2027, the use of water to cool servers will be globally 6 times the annual consumption of water by Denmark. So it gives you a sense of the environmental footprint of AI.
So just to cool the water cooling for the AI processing,
yeah,
6 times Denmark's water consumption.
Yeah.
Wow, that is incredible. We'll come on a little bit more as well onto the macro implications, probably actually with the next question. So in terms of building customers' trust, which Lieming you touched on, as being critical for the fintechs themselves to succeed, what role can regulators and market players play to build this digital assurance? And I'll start with Fariz, and Fariz is incredibly well placed to answer this question, given, I think, very unusual, maybe the only person in the world with this background. Your undergrad was in fintech, and then your master's was in central banking.
Yes.
So this is quite an incredible combination to be talking on this topic.
I would call it a prudent combination in that case.
Yeah.
Okay. So back to your point, regulators should be increasing and maximizing the systematic approach, the risk-based approach, and minimizing the discretion in the form of policy making in terms of regulatory framework. That opens a venue of actually prudent innovations and for fintechs to have an open dialogue with the regulator. So coming back also to what are the regulators committed to? They are committed to ensuring a prudent frameworks, a prudent environment for those innovations, for fintechs or conventional financial institutes to stabilize, to grow in a sustainable manner. On the other side, fintechs also are committed to adhering all of the compliance and regulations. And in addition to that, let's look at it as this is the minimum that they should do, but they should do more towards ethical practices in serving their clients. Hence, I would like to mention some, and zooming in, some of SAMA's efforts in that domain, either in the ethical aspect or in the technical aspect. Starting with the technical aspect, we have launched many policies related to data privacy, to cybersecurity, which enhances the trust to those fintechs. On the other side, we also launch guidance for behavioral transparency and ethical recommendations. I would like to also conclude by noting that regulators need to have an open dialogue with the financial institutions, or the fintechs specifically. Fintechs needs to have also a prudent dialogue with the regulators.
Sure. So thank you very much in terms of that and the regulator's approach. We've touched between us on various elements of ethics in fintechs. We've got data security, cybersecurity, transparency, building customers' trust. Then what about also and of course AI, but on the macro level, if I come to you, Nicholas, in terms of the broader systemic potential risks of the AI, talk about market manipulation.
No, certainly the aspect that I mentioned before were more at the micro level. But there is a nexus between issues related to financial stability on the one hand and ethical considerations. And in particular, the specificity of AI is that it really increases the possibility of manipulating markets. Yeah. We know in particular with generative AI can generate deep fakes that can then be spread on markets, spreading disinformation, what we call hallucination. And these have really a distortive, if not a disruptive impact on trading activities. Obviously, we are really at the start of using those technologies. So from a regulator perspective, I would say the regulators consider that it's not yet a systemic risk. But if AI-based models are mainstreamed through financial activities, those issues could become really a systemic problem. So the regulators are also looking at those aspects from an operational perspective and the impact on the financial stability of the system.
Sure, thank you. And I think, so I used to be an algorithmic trader, and that, the scale of progress since then when we were at the pioneer, in the forefront of the financial markets, to now see, we never would have dreamed that AI could then have the impact that potentially algorithms could have on the market, but 100-fold, by magnitude of 1,000. What about yourself, Lieming, in terms of, having customers that never had a credit card to then serving 1 billion consumers? You probably had to adapt to seeing risks that were just not there, not just in times of time frame ago, but with that sheer scale of consumers. Sort of how do you, what's the size of your team to deal with that and assess those risks? How does Ant go about it?
Sure, no. Well, it's a very interesting, I think, in the fintech sector, innovation is really advancing very rapidly. With the customer base we serve, and with the new emerging technology, whether it's blockchain or AI, we see tremendous benefit of the technology, as well as the downside and the areas that technology can be abused. Yeah. So we have made a commitment to our customers, to the industry, and to the community that we shall endeavor to prevent the abuse and misuse of technology. Yeah. And we do what we can in our arena. And I think started from principle, translating to action, how you can ensure that it can be implemented through your organization and through your business process. Yeah. Now, first of all, we started from a corporate governance perspective. We have a technology ethics committee at our group level, which leads our technology ethics initiatives and provide guidance to business in terms of what are the best practice, and also sort of initiate company-wide training to increase the awareness of the workforce. So and the third aspect really is, have an open collaboration. You all mentioned about public-private partnership in this area, extremely important. And we have seen many, many use cases and views and good aspects and everything, how we sort of work with regulators and policymakers to really discuss the emerging issues and how best to sort of regulate to have that balance between innovation and the risks, right? So I think you talked about AI-based deepfake, and we have encountered, our CEO was here yesterday talking about how we work with regulators to counter the deepfake in that process, right? I mean, that is the part that technology innovation is great, but at the same time, it's open to everybody, including bad actors. So how we sort of have this private-public partnership to really contain that misuse and abuse is our responsibility, as well as the regulators, the policymakers.
Yes, so you mentioned there the principles, and I'll come on to you, Nicolas, in a second to talk about that, like how principles govern a lot of regulation internationally. But Faris first, because we've talked about the potential bad actors. Fintech is also serving underserved communities, customers, demographics. We've seen so much in terms of Saudi's responsibility and really honouring that, with it especially matched with your pace of growth. How do you view SAMA's role in ensuring that those underserved communities, customers, companies are appropriately catered to?
We look at fintechs as an important contributor to financial inclusion, either for retail beneficiaries or SMEs. Locally within Saudi, we have seen fintechs, honestly, professionally providing equally that service around the country, serving all clients equally, not discriminating one over another. However, the other aspect of the question, we have seen a global practices in some business models taking advantage of unserved segments. Zooming in one example at top of my head, which is the micro SMEs. I have seen some business models that charge 40% or 35% per annum for micro enterprises. However, those enterprises are really an important pillar in the economy if we would look at it in a macro level. We would see their contribution is tremendous to countries' GDP. So here I really want to emphasize on the ethical practice towards those business model. I really think fintechs should not abuse this unserved business model and be very rational in terms of pricing it, looking at the ultimate goal behind serving those SMEs. Especially within the same example, I have seen the default rates of those business models are around 2% or 3%, while charging like 35%. I think there is a huge gap on that need to be considered. So the ethics on that practice will ensure the trust on the same company and sustainability as well.
Shukran, thank you. And I think that's important as well to emphasize that it's sustainability from a long-term perspective to ensure that those fintechs are still around and that the innovations that they've come up with are adopted because they're affordable for all and not taking advantage of anybody. In terms for Nicolas, how internationally standards can be adopted. Lei-Ming mentioned like being principles-based. Is that how it works internationally, or how rules and regulations can be adopted?
There was an interesting paper in the Financial Times yesterday, so very timely, in the Lex section of the FT, stressing the fact that the regulators will be always behind technological progress, especially when it comes to finance and the development of AI. I'm not sure it's true. When we actually conducted a very comprehensive survey of financial regulators in the 38 jurisdictions of the OECD, plus 8 non-OECD members. And by and large, what the regulators are saying is that their regulatory framework are fit for purpose.
Sure.
Why are they fit for purpose? Because they are principle-based. So they are technology neutral, so they should apply irrespective of the technology that is used. So they are dealing with disclosure, with fairness, with accountability, transparency, operational resilience, management of risk, fraud, money laundering, and so on, but irrespective of the technology that is used. So in principle, it should apply to AI.
Yeah.
And this is how most of the regulatory frameworks are built internationally. If you look at MiFID II in the EU, if you look at ACC regulations in the US, it's the same in the UK. So it's technology neutral, it's principle-based, and it should, by construction, cover new developments in AI. This being said, what we are looking at is, what we are seeing right now is that at the implementation level, there is the need to develop specific regulation to tackle specific aspects related to AI. If you look at the recently adopted comprehensive piece of legislation of the EU on AI, which is the EU AI Act, most of the financial sector is actually out of the scope of this AI Act.
Right.
This is actually dealt with by pre-existing regulation. I mentioned MiFID II. But there are a couple of sectors, in particular credit underwriting by banks, and also health and life insurance, which are specifically covered by this EU AI Act, because there are specific issues and specific risks associated with the use of AI in those two areas. So the regulators, they are pragmatic, they are basically relying on their existing frameworks, but they are also closely monitoring what is happening, and they are really ready to adapt and to adjust their regulatory framework to take into account recent development in technology.
And I think that's also important to reflect that countries can act individually, regulators, central banks, for all issues that evolve in fintech from an ethical point of view. But we probably don't have time to cover it in depth, but that international global cooperation, which I'm sure for the OECD is a priority, and working with other groups like UNESCO's Women for Ethical AI and ISCO, is it important to ensure that bad actors can't progress as a sort of potential jurisdiction versus other countries, that there is that global collaboration?
It's absolutely key. What we want to promote is a certain level of harmonization across jurisdictions. It's really a requirement for business, because business, they are operating across cross-border, so they want to have a sort of harmonization and avoid a fragmentation of the regulatory landscape internationally, because otherwise it generates a lot of operating costs for them. So on the business side, it's really critical. But also, if you think in terms of ethics, indeed, what we want to avoid is regulatory arbitrage by the business, so that they would go to the low-regulated jurisdictions. So what we want to ensure, indeed, is a sort of level playing field.
Well, I think we've got the globe covered between us as well. We have KSA, we have Asia, France, Europe, and the UK. So we're a good example of collaboration. But we're down to 1 minute left now, so I think I'll just hand over to each of you to wrap up with a final thought, if you like, on ethics and in fintech.
If I may, I really echo with my panelists. Regulators need to have an open dialogue, need to be risk-based and more systematic. We minimize the discretion in that domain. And as Nicolas said, they are pragmatic and need to be pragmatic as well.
Thank you.
Yeah, from a private sector perspective, I think I always enjoyed talking to central bankers, and Farish, I always enjoy talking to you. And listen to policymakers in terms of, what do you think in terms of landscape? But technology has always been advancing much quicker than we expect, especially in the private sector. We see a lot of things, and we, in many respects, drive the technological innovation. Then the regulators will come say, okay, let's have a balance. Now, for us, I think not to do something is easy. Yeah. Especially in the fintech sector, we serve underprivileged people. They need a special protection. The challenge really is to us, what affirmative actions you need to have, right? To really educate them, to anticipate the frauds and other things. So that is something that we think we can work even more closely with the regulators and public policymakers and others.
Thank you very much. Nicolas.
So maybe 3 words. First one is neutrality. So tech neutrality, I mentioned that before, to make sure that the regulators are not behind. Secondly, proportionality. Make sure that regulation is agile, nimble, and is there also not to stifle innovation. And therefore, as I said, supervision needs to be risk-based. It needs to be commensurate with the risk, the complexity, the scale of the business, and it needs to be really also reliant on the materiality of risk. So that's, I would say, the 3 principles for a good regulatory framework.
Well, thank you very much, all of you. And on behalf of Nicolas, Lei-Ming, Faraz, and myself, it's been an honor to be here and speak to you at 24 FinTech. So thank you, shukran jazilan.
Thank you.